Hey there, this is John.Hunter, your mortgage advisor, coming to you this week with a tip on VA loans. This week I want to talk about VA credit, seller credits on a VA loan. We're in a market right now where, for the first time in several years, sellers are a little bit more willing to be flexible when negotiating on transactions. We're getting closing costs paid, we're getting concessions, and in some cases, even price reductions. So, VA has a very cool clause that allows more flexibility than any other loan. So just like everything else, right? VA is just amazing. There's just so many little tricks like this to VA loans. Believe me, keep watching the channel, and I promise you I will be sharing some nuggets. This is one of my favorites. So VA will allow up to 4% towards closing costs for normal allowable closing costs, right? Okay, that's not uncommon. Conventional will do 3 to 6, and FHA will go to 6. So that's great. So they'll allow 4, which honestly, on a $500,000 house, that's $20,000. That's going to cover closing costs in vast majority of states, right? So there you go. But here's where VA gets different, right? They will allow an additional 4% to be paid towards debt. That's right. They'll pay off credit cards. They'll pay off tax liens. They'll pay off student loans. They'll pay off car loans. Any legitimate debt that we can provide a statement for, we can prove, they will pay off as part of the loan. There is no other loan that will do this, right? Conventional, if you put minimum down, you're limited to a 3% seller contribution, and they don't allow any debt whatsoever. Same with FHA, they'll go to 6%, but no debt, right? So if we have extra credit left over, there's nothing we can do with it. It goes back to the seller, right? Or we negotiate a price reduction. We try not to leave it on the table when we can. Nobody likes that. It's just bad. But with VA, I've had situations where there's money left over, and I'll give the buyer a call and go, "Hey, we have a little bit of extra seller credit. What credit card do you want to apply it towards?" That's a great phone call, right? Nobody expects that. It's just such a cool trick. Now, here's where this tool can really, really shine, and where it really makes a difference, right? So just like everybody else, everybody wants the nicest house for the lowest payment, right? And least amount of money. Well, nobody does that better than VA, right? They'll go zero down. So we go zero down, we negotiate closing costs from the seller. We can then negotiate up to 4%, right, towards debt. So let me give you an example. So a $500,000 house, we get closing costs paid for, boom, done. We ask for 4% towards debt. That's $20,000 on a $500,000 purchase, right? $20,000 that we can apply towards, say, credit card car payments. So it's not uncommon, if you have $20,000 worth of credit card debt, right, your minimum payment is at literally the low end is $600-700 a month, right? Could be as much as $1,200 a month, maybe even higher for $20,000, right? That's not uncommon, right? But let's just say the low end, right? Let's say it's $600 a month. Well, if we're not counting that in your debt, and I'm not having to use that in my debt to income ratios when I qualify you, that payment difference, that's much more of a mortgage you can qualify for. That's going to equate to, in this market with rates high, $75,000-80,000 in purchase power, right? So boom, right there, by negotiating a little bit extra from the seller, we can increase your purchase power by up to $80,000, and that's for $600 a month. So if it's more, if we're eliminating more debt than that, you can do the math. It adds up in a hurry. It makes a massive difference in what people can qualify for. And in this market where affordability is a problem, right? We're at the lowest affordability index we've been, I believe I read, since the mid 80s, right? Well, if you look back, mid 80s rates were in the teens, right? 14 to 18%, 1984, I believe. I think we topped out. Thank God we're nowhere near there. But the affordability index, as far as the prices with inflation and with high interest rates, it's never been higher. So this tool is this amazing tool, only available to veterans. So by paying off that debt, whether it be credit card, car payments, student loans, whatnot, we're able to lower, obviously, the monthly outlay, total monthly outlay, and make it a little bit easier to afford, if not outright qualify for more. So it's a tool I can even pre-qualify people with, or pre-approve it, right? So we just, going into it, hey, when you find a house, we need to negotiate for X amount towards closing costs and X amount towards debt to achieve the approval that we're looking for. So now there is a downside, of course, like anything else. There's danger to this, right? The one thing we don't want is to go in and pay off a bunch of credit cards and then have those credit cards just get racked right back up, right? Especially when you buy a house, right? You got blinds, you got furniture, not everything's going to make it up to that next level, right? So you need new stuff. It does take a little bit of discipline on controlling your spending habits if we're going to pay off a bunch of credit card to not turn around and just rack that credit card rate back up. Because especially if we're pushing the qualifying limits, I don't want to put you in a position where you can't afford the house, or you have to eat ramen every day. Nobody wants that. So we don't want to do harm here. We want to put people in a good position. But we're also not your parents, right? We're going to do what you tell us to do, and that's just the way it works. But I'd be doing you a disservice if I didn't at least bring that up and bring it to your attention. So if it's something you're comfortable with, obviously it's a wonderful tool, only available to veterans. It's just not something that's out there available to any other type of loan. So it's a tool that we can educate the real estate agents out there. If you're one, this is a great tool. Not everybody knows about it. That can help people qualify for more and get into the house that they really deserve and that they want. And to show an example, a scenario that I've done a few times over the years, it's really worked out well, is when I had a guy who came to me and they paid like $2,000 a month in rent, right? And he had a car loan and a couple credit cards, and they were pretty high, right? And the total of the debt was like $15,000, and the total monthly payment on it was, for the debt, was like $800 a month, right? So combined, he's paying like $2,800 a month between his rent and the debt, right? But the new house he bought, paying down off the debt, without the debt, the new house payment was only like $2,500 a month. So literally, he bought this brand new house, nicer than where he lived, and his monthly debt went down by $300 a month, right? I mean, how cool is that? So if he can afford the bills he had before, which he did, now he's stepping into a scenario where he's buying this house and his payment just went down $300 a month without the debt. There was monthly outlay went down. So it can really work in veterans' benefits and in their benefit. And it's something that I try to educate the best I can. So hopefully you like this video. Hopefully this is something, if you know a veteran who's looking for homes, can't quite find what they want to qualify for a little bit more, this is a tool right up their alley. If you have any clients in that scenario, have them give me a call. I can walk you through it, show you how it works. It's a wonderful tool. It's a benefit you guys earned. Veterans, close to my heart. My father, being a retired colonel, grew up on Army bases. This is a passion for VA loans my whole career. So, and this is one of the cooler tricks. There's lots of them, but this is one of the cooler ones, I believe. Anyway, have a great weekend. John.Hunter, your mortgage advisor. Come back for more. I'm going to be adding a lot more content like this. Want to just share as much as I know out there with everyone, and hopefully bring value, and once in a while a smile. So there you go. Talk to you soon. Bye-bye.